Hello everyone. For today, we have the different forms of business organization and its advantages and also its disadvantages. At the end of the topic, you are expected to learn these learning outcomes. Differentiate the forms of business organizations in terms of nature of ownership. Identify the advantages and disadvantages of the four forms of business organization. And give examples of businesses in your respective communities and identify the form of business organization. We have the forms of business organizations. These are the sole proprietorship, the partnership, the corporation, and last, the cooperatives. Last time we had the types of businesses around our community. One of the first decisions that you have to make when someone enters in business is how your business should be structured. Don't get confused with types of business operations. In the four types of business operations, the service, merchandising and marketing, and the hybrid business, it is on how they will operate. It's purely in the operations, the processes or the flows of business. While in the forms of business organization, it talks about the ownership, the possession, the legal owner, who manages and controls the business organization. The first and the oldest form of business organization is a sole proprietorship. But what is a sole proprietorship? A sole proprietorship comes from the word sole, S-O-L-E, meaning the undersurface of a person's foot. It means you can stand on your own feet or work multitasking. Solo also means a person who works, acts, or performs alone. It is a business owned and managed by one person with the advantage of enjoying all the profits by himself. Sole proprietorship is the simplest, the oldest, and the most common form of business organization in the world. The Department of Trade and Industry is the government agency that regulates the trade names of sole or single proprietorship businesses. What do you call the person who manages a sole proprietorship? The owner is called a proprietor. What are the advantages of a sole proprietorship? In a sole proprietorship, it is simplest and least expensive form of business. The owner makes all the decisions and controls the whole operations. It does not require a large amount of capital. All profits flows directly to the owner. It is manageable, meaning easy to form and operate because it is subject to fewer regulations of the government. It has tax advantage, meaning any income is declared as the owner's personal income tax return. Therefore, there are no corporate income taxes. There are no interference in the management of the business because you are alone in doing your own business. As a sole proprietorship, you are the sole CEO, the sales, the finance, and you are doing a multitasking task. What about the disadvantages of a sole proprietorship? These are easy dissolution because the life of the business is limited to the life of the owner. Once the owner dies, the business will legally cease. If succeeded by a family member, the one who takes over is the new owner. In a sole proprietorship, there is also unlimited liability, and it has a limited ability. The amount of capital is limited only by the wealth, that is, the owner's personal savings and loans of the proprietor. Thus, it is difficult to raise capital. What about partnership? Partnership comes from the word partners. They say just one great partnership with the right person can have an incredible impact on your business success. Do you believe on that? Partners are two trusted individuals who would come up with a business idea, then later on put up a business. So, a partnership is formed by two or more persons who agree to contribute money, property, or service with the intention of dividing profits among themselves. This also entails trust, sharing, harmonization, networking, collaboration, support, and teamwork as well. The details of the arrangement between the partners are outlined in a written document called Articles of Partnership. Profits are divided among partners based on their agreed sharing of profits. The most important aspect that builds a partnership is trust. They say two heads are better than one, so teamwork makes the dream work. How about, what do you call the investors of a partnership? From its word again, the investors of the partnership are called partners. There are also advantages of a partnership, and these are: all partners can take part in managing the business. It is relatively easy to form, but considerable amount of time should be invested in developing the partnership agreement. More capital, shared capital. It is easier to raise capital because more than one person contributes to a common fund. Any income is declared as the partner's personal income tax returns. Therefore, there are no corporate income taxes. Employees may be motivated and attracted to the business by the incentive to become a partner. There is also better management performance for a partnership. There is a shared risk and lesser risk of loss. There is a shared expertise, division or delegation. And the disadvantages or the cons of a partnership are unlimited liability. In here, partners are individually and jointly responsible for all the obligations of the business. In a lawsuit, especially in times of insolvency, personal properties of the partners can be sold beyond their contributions to answer for any liability of the partnership. Partners must make decisions together. Therefore, disputes or conflicts may occur. It may eventually lead to dissolving the partnership. It is less flexible due to more owners. No partner can transfer his share to any person. It is easy to invest but difficult to transfer. Partnership also has a limited life. It is easy to be dissolved due to the death or insolvency of partners. Every partner has the right to be involved in the decision making. The profits are divided among the partners. A partner can be held liable for the acts of the other partners. The third form of organization of any business is called corporation. What is a corporation? It is an artificial being created by corporation law, where the rights of the investors over the assets are expressed by the number of shares or the shares of stocks held. In a corporation, the management of the business is entrusted by a few stockholders only, which are called the board of directors. The word corporation, incorporation, corp or inc, inc, appears in the name of the entity. What do you call the owners or investors of a corporation? The investors are called stockholders, whose rights over the business are expressed in the number of shares, both evidenced by certificates of stocks, or the proof of ownership is evidenced by a stock certificate. Some examples of corporation are the Honda, Adidas, and the McDonald's and many. In a corporation, we always see the certificate of shares or the certificate of stocks, one of which is an example of the P&G, the Procter & Gamble Company. The Securities and Exchange Commission or the SEC, SEC, or in Filipino, Commission sa mga Panagot at Palitan. It is the agency of the government of the Philippines responsible for regulating the securities industry in the Philippines. There are also disadvantages of a corporation. A corporation is restricted because there are more regulations, several legal restrictions as listed in the Corporation Code of the Philippines. Corporations are more closely monitored by governmental agencies, complicated to set up, or more costly to incorporate than other forms of the organizations. Profits of the business or of the corporation is taxed by the corporate tax rate of 35%. There is also a limited liability. Stockholders are not liable for its debts or its liabilities. There is also a double taxation in a corporation because the corporation pays taxes. Dividends for shareholders are also taxable. Independent management. Since the BOD or the Board of Directors can operate the business without intervention from owners. This is an example of the Philippine Stock Exchange. You can see this on Facebooks or the different internet access, and we can see all the different stock exchanges in all the parts of the world. There are also advantages of a corporation. It can raise additional funds through the sale of stocks. Transferability of ownership. In a corporation, shareholders can easily transfer the ownership by selling their stock in public. There is also a limited liability. It is an advantage because the shareholders are only liable up to the amount of their investment. Their personal properties are not affected. In a corporation, it has a perpetual life. There is no limit to the life of the corporation, since ownership can be passed through sales of stocks in the Philippine Stock Exchange. It has also an indefinite life of a corporation that is up to 15 years and then it can be renewed. There is a centralized management because it is managed by a board of directors. There is a huge amount of capital that can be put up considering the number of stockholders allowed to invest. Experts could be hired herd, resulting in efficient management. The last forms of business organization is the cooperatives. A cooperative is a duly registered association of persons with a common bond of interest, voluntarily joining together to achieve their social, economic, and cultural needs. The word cooperative appears in the name of it. The owners are called members, who contribute equitably to the capital of the cooperative. The members are expected to patronize their products and services. The primary objective of every cooperative is to provide goods and services to its members, and thus enable them to attain increased income and savings. Cooperatives are regulated by Cooperative Development Authority. This is the lead government agency mandated by virtue of Republic Act No. 9520 or the Philippine Cooperative Code of 2008 to promote the viability and growth of the Philippine cooperatives. It is the only government agency that registers cooperatives. The advantages of a cooperative. First, it is open and voluntary membership. In a cooperative, membership in a cooperative is voluntary and available to all individuals, regardless of their social, political, racial, or religious background or beliefs. There is no limit on maximum members, just like the corporation. There is also a democratic control. Cooperatives are democratic organizations. Their affairs are administered by persons elected or appointed in a manner agreed upon by the members. Members of primary cooperatives have equal voting rights on a one-member, one-vote principle. The division of net surplus in a cooperative is net surplus arising out of the operations of a cooperative belongs to its members and shall be equitably distributed for cooperative development common services, indivisible reserve fund, and for limited interest on capital, and or patronage fund in the manner provided by law. A patronage dividend, also known as a patronage fund, is a distribution that a cooperative pays to its members or investors. Patronage dividends are given based on a proportion of profit that the business makes. Each patronage dividend must be calculated based upon the basis of the quantity or value of business done by the cooperative. It is also called profit payout. The cooperative can distribute the patronage funds to its owner as cash or retain a portion as additional investment in the business. Cooperative education. All cooperatives shall make provision for the education of their members, officers and employees, and of the general public based on the principles of cooperation. Cooperation among cooperatives. All cooperatives, in order to best serve the interests of their members and communities, shall actively cooperate with other cooperatives at local, national, and international levels. Cooperatives also enjoys a certain tax exemption privilege. Cooperatives that are incorporated normally are not taxed on surplus earnings or patronage dividends funded to members. In a cooperative, there is also a perpetual existence just like a corporation. A cooperative structure brings less disruption and more continuity to the business. It promotes the concept of sharing resources. Cooperatives also operates for the benefit of its patron. There are also disadvantages of a cooperative. These are: it is limited distribution of surplus. There's also lack of membership and participation. Corruption. Lack of profit motive breeds fraud and corruption in management. This is reflected in misappropriations of funds by the officials for their. Thank you for listening, and I hope you have learned the different forms of business organization. Thank you until next video.